So, what even are stocks? Hello, it's Roland Mills, a classically trained opera singer and former starving artist. Welcome to my channel. I'm here to inspire you to make money and build real wealth, so subscribe for more personal finance conversations like this one. Due to the illness of 2020, many of us have heard increased news about the stock market. Is it crashing? Are we in a bull market? How many shares of Tesla are you gonna buy? Many of you may have had friends desperate for some human interaction actually, pick up the phone and call you instead of texting and ask you what stocks do you own, or if you think the EV market is a bubble. And many of you just nodded your head confidently, replying something like,
"Oh yeah, I've got tons of stocks, all of them actually. They barely fit inside of the back of my truck,
Wait, do you not know what the stock market is? Rather than embarrass yourself, just watch this video. Today, I'll be covering what stocks actually are, what risks and rewards may be found in owning them, and the best way to start investing as a beginner investor. Quick disclaimer, I am not a licensed financial advisor. I'm just an opera singer on YouTube sharing what information has worked for me in the hopes it will inspire you to grow your wealth as well. Before we get started, I'd greatly appreciate if you would just go ahead and tap that like button. It helps to spread the word to other people like you. Also, subscribe and hit that notification bell thing that's probably right in front of my face so you don't miss out on future tips I'll be dropping along the way. Alrighty then, let's get into it. Let's talk about stocks. The quickest summary I can give is that stocks are pieces of companies that companies sell to investors in order to raise money. They then use that money to increase the value of the company, thereby paying investors back by increasing the value of the stocks that those investors own. Let's break that down with an example. Say you run a lemonade stand and you make amazing lemonade. You constantly have a line down the street of thirsty people wanting more of your lemonade. You only have so much money though, and you can't scale your business to meet the demand. Your lemonade business is an asset. An asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that it will provide a future benefit. Your lemonade stand makes you money, therefore it's an asset. Let's say the total value of this asset is $10,000. $4,000 of that $10,000 was the business loan that you took out to fund the lemonade stand's construction in the first place. If you subtract the company's debt or total liability from the value of the company's total assets, the remaining $6,000 is called equity. Now, as I mentioned earlier, you need to scale the company so you can service that giant line of customers. That said, you really don't want to take out another loan that you have to pay interest on. Instead, you can raise capital by selling off pieces of your company. I'm not talking about actual physical pieces. That's a process called liquidation, and you need all of your equipment to keep that summer juice flowing. Summer juice? Like lemonade. It's juice you drink in the summer, Nah. Instead, you take your equity, which is the value of your total assets minus liabilities, and you use the magic of make-believe essentially to divide the idea of ownership of that value into equal parts. For the sake of this example, let's just say you broke that $6,000 of equity into 5 equal parts, each worth about $1,200 each. Those equal parts are called shares or stocks. You can then sell ownership of those pieces on the stock market and use that free money to buy more lemons, hire more lemon squeezers, and upgrade overall production. This money is essentially free as it's not money you need to give back. Wait, why am I giving my money to this lemon company if they don't need to give it back? Very good question. If you want to sell pieces of your company, you have to provide value. The best way to do that is by increasing the value of your company. Now that you've hired the lemon squeezers and bought a bigger lemonade stand, you're able to serve more customers more lemonade. This has now increased your revenue, which increased the value of the company. Now your lemonade stand is popping. It's increased in value from $10,000 to $100,000. Those faithful investors that gave you their money believing that you would make your business grow are now rewarded. The value of the stocks that they bought grew in value at the same rate as the company grew. So their $1,200 pieces are now worth $12,000 each. Everybody wins. Unless, as I mentioned earlier, the value of each stock are tied to the value of the overall company, as each stock is a representation or derivative of the company's equity. That means if business takes a downturn and those customers stop coming, the value of each share also decreases. Okay. So I get that stocks are pieces of companies and can grow as the company grows, but I've got friends like Roland Mills here making insane gains on Tesla stock, even though the company just started turning a profit at the end of 2019. Why are shares of Tesla worth so much? Well, as I mentioned earlier, stocks are sold on the stock market, and the market determines the value. Our collective belief that something is worth more can cause the company to be worth more. It's simple supply and demand. If there are only 5 shares of your lemonade stand available, and many more people than just those 5 wish that they could own a piece of your company, then shareholders can sell their piece to the highest bidder, thereby racking up the cost. As the stock sells for higher than the original value, the investor makes a profit and the overall company rises in value. Got it! Totally get stocks now. So what are bonds then? Well, bonds operate similarly in some respects and very differently in others. Bonds are viewed as the safer investment as they are more guaranteed. They are debt securities issued by corporations, governments, or other organizations and sold to investors. So just using our lemonade stand example from earlier, remember how out of the $10,000 in assets, 4,000 of that was the business loan that we took out to fund the lemonade stand's construction? That loan is a debt that the company repays with interest, and the lender is the owner of that debt. Bonds are what happens when like with stocks, we split up ownership of that debt and sell it off to investors. The company benefits from getting access to a loan, and the investors who own those bonds are paid back their principal investment over time, plus interest. Unlike stocks, if the company grows its revenue, the bond doesn't increase in value. Likewise though, if the market takes a downturn or if the company runs across some hard time, the bond doesn't drop in value. The investor who owns the bond receives the same interest payment that was originally negotiated. Because of this, many investors view bonds as more stable. After all, if the company were to go out of business, the bondholders would be paid first as the company liquidates its assets.
Liquidates his assets? It's the lemonade stand?
No, dude. That said, because it stays stagnant, you're going to experience far more growth buying stocks. So that brings up another interesting point. Is it better to buy stocks or bonds? Well, I am not a financial advisor, and this video is for educational and entertainment purposes only. What I will say, though, is that your financial situation could benefit more from one strategy versus another. For instance, if you are earlier in your process of building wealth, investing in stocks might be the better path to take, as you'll experience more growth. If you have already amassed a sizable amount of capital, however, and are just looking for a stable and safer passive income generator, buying bonds might be a better path for you. Either way, you're gonna want to pick up 2 free stocks with Webull. If you use my link in the description below, Webull will grant you 2 free stocks valued up to $1,850. That's absolutely free money. Webull is not the simplest brokerage to use though, so I've left referral codes to a few others below as well. Grab all the free stocks and move them over to whichever platform you like best. Next, you might want to educate yourself on the best stocks and bonds to add to your portfolio. A good place to start is right here on my channel, so subscribe and hit that notification bell and you'll be alerted of every video that I post. Before I close up for the day, let me prep you with a quick warning. There is no way to invest without risk. Whether you buy stocks or bonds, you are liable to market volatility, world-stopping illnesses, inflation, companies going under, and taxes. Make sure that you do your own research and only invest in companies that you truly believe in. There is plenty of opportunity out there, and if a stock you love starts to plummet in value, like Tesla did recently, ask yourself if this drop is due to something fundamentally being wrong with that company, or if it's a temporary downturn due to rumors or ultimately inconsequential and temporary bad news. Don't panic sell, just chill out. Buy more shares of Tesla or whatever stocks, bonds, ETFs, index funds, etc. that you love, and read a good book, like this one, written by my beautiful wife, Jessie Marie. Link below in the description if you're curious. Well, that's the end of today's video. I hope you found it educational and entertaining. I'll eventually monetize this channel just so YouTube will blast it out to more people, but I really am not doing this for the money. I'm doing this because I truly believe that there must be a way for artists like myself to create without becoming starving artists. Stay tuned for more personal finance tips, reaction videos, and stories from my days as a performer in the future. In the meanwhile, feel free to follow me on Instagram and comment down below if there's a topic you'd like to see me tackle next. Till the next time, I hope you all keep creating and spreading love through your art. That's something that money cannot buy, and it's the best part of the human experience. Much love, y'all. Bye.